Hello and welcome to the first trading day of this week. Here's what's coming up in the next 55 minutes. Nigeria's debt service goes $854 million in May, which is the highest level in 4 years. And Egypt's inflation decelerates to the slowest pace in a year and a half, even after a steep currency devaluation. As the trading week kicks off, we get an outlook for the US dollar index. And it's great to have you join us. I'm Ladi Williams. Let's kick off with markets we track right here. That's the global oil market. We're seeing prices edging up this afternoon. Brent, see that's $79.58 a barrel. That's up about 0.31% this afternoon. Try to get back above that $80 mark. But for WTI, we're seeing that $70 level that held. It's now $75.73 a barrel, 0.26% up. We'll drill down on what's driving sentiment there later on the show. But for gold now, metals, we see gold prices held steady today after a sharp sell-off in the previous session. Spot gold, though, is down 0.37%. $2,316 per ounce. Silver shining 1.44%. On the flip side, $29.86 per ounce. Palladium, that's still below the $1,000 mark. $926.50. That's what we have for palladium in the metals market. Now we see data from the Central Bank of Nigeria indicates that debt servicing, as at the end of May 2024, stood at $854 million for about $215 million month to month. This remains the highest figure in the historical data provided by the CBN, which dates back to October 12, 2003. The second highest was $1.52 billion recorded. That was November 10th, 2006, before the recent $854 million payment in May, which took the third spot. A month-to-month breakdown of Nigeria's debt servicing for 2024 showed that in January, the debt service payments was $560 million. I will see the Abia state government assures residents that the Dr. Alex Otis-led administration will continue to build a business-friendly environment in the state in order to improve the ease of doing business and boost economic growth and development. Speaking during the commissioning of a multi-million naira logistics and e-commerce corporate headquarters in Umuahia, the Deputy Governor of Abia State, Engineer Ikechukwu Emetu, said the ongoing infrastructural development in the state, the clampdown on touts and renewed fight against criminality were part of strategies to make Abia investor-friendly. Take a listen.
As a government, we are one that is trying to create that ease of doing business in the state. And first of all, we are trying as much as possible to bring in security and at the same time allowing businesses to thrive properly, especially investors like you. Because when you invest in the state, definitely you will be able to employ a whole lot of people who will be causing problems in the state and at the same time causing the problems for the government.
And now to our first conversation. Well, we have new data out from the National Bureau of Statistics. Shows that Nigeria's trade for the first quarter of 2024, see that 31.81 trillion, that was value for the whole quarter. And imports, see 12.64 trillion as for imports in the first quarter of 2024, representing an increase of about 39.65%. See exports there exceeding imports, 19.16 trillion. And the trade balance there, that's a surplus, 6.52 trillion. We know economists like this kind of data. Normally that should translate to better economy and stronger currency. But let's drill down on these numbers. Joining us now is Dr. Bamidele Ayemibo, is the MD, lead consultant, 3T Impacts Consulting Limited. Joining me via Zoom. Great to have you on the show. I think you might have to unmute. I see your mouth moving, but I can't hear anything.
Yes, good afternoon. Can you hear me?
Fantastic. I hear you now. So finally, Nigeria's export have exceeded imports. We've been wanting this for the longest time now. That's for the first quarter of 2024. How is this data being received?
With some mixed feeling. Mixed feeling because we need it to be not just exceed, but far, far exceed, so us to be able to have much more FX coming in to be able to ease the challenge that we're currently facing in the FX market. But it's a good news. We hope that this should continue to the level that it begin to impact on the exchange rate, particularly for Naira to dollar in Nigeria.
So what would you say drove this recent move here, seeing exports more than imports according to this trade data? What do you think is the major proponents of this rise we see in exports?
Different sectors actually, from crude oil that was increased, both QQ increase, Q on Q and Y on Y, year on year, and quarter on quarter increase for both manufacturing sector, agri sector. Although we have a lot more with crude oil and agri, some over 100%, in some cases over 200%. Now, what's painful also is the fact that we're still facing the challenge we've always spoken about, the challenge that has to do with the fact that we're depending so much of non-oil, on oil rather, on crude and raw materials. So we have a lot of agri, from sesame to cocoa to cashew, and then of course crude oil and gas contributing significantly to this, including minerals actually, solid minerals contributing significantly to this. Manufacturing also contributes, but manufacturing competition is a lot smaller when you compare to other. Manufacturing is about 14%. Quarter-on-quarter increase, whereas if you look at agri is over 100%, and of course solid mineral is over 70%.
All right, so normally when exports exceed imports in an economy, that should be a plus for the local currency, but we're seeing some kind of stability with the Naira. But do you expect more strengthening in the FX market with this?
If this continue and the import demand plateau or begin to decline, then I expect to see appreciation of Naira in the FX market. But now, let me tell you something about the trend for export in Nigeria. The Q1, Q2 are usually high because of the dry season. That is when a lot of agri is being exported, and solid minerals also contribute because there's no rain. So the agri are just being harvested. So we just have harvest of agri. Now, after the harvest of agri, then we have also the mineral being able to mine because the mines are not flooded. So Q4, but more importantly, Q1, Q2 to a very large extent as a result of this. So if we see this trend going up in Q3, Q4, and it continue to increase, then and that of import plateau or decline, which is not the case now, we should begin to see a lot of impact of this in the FX market. And then government effort also, because as it is right now, I can't say there is apart from crude, I can't say there's a serious government effort on the non-oil, because the non-oil is still about 10%. According to this report, it's still about 10%, 9.2% actually. So I've not seen a significant effort, as in programs, policies of the federal government to be able to ensure that this continue. So this now, I would say, is because of the effort of the private sector, or maybe because of the interest of people in generating forests, not because of any serious effort on the part of government in terms of policy direction to encourage non-oil export growth.
And definitely, we're talking about import substitution at this time. We're trying to promote that for the longest time. But in your opinion, have the hurdles for exports been reduced so far? Is there
hurdles? We need to look at them holistically. If we look at the logistics part, in terms of issues at the port clearance, that has been reduced to a large extent, because clearing and shipment now, the time it takes, at least in the last 2 shipments I've done as an exporter, I think is a lot better. What I think we've not seen is logistics cost of moving the goods to the destination, because of the high cost of diesel, because of the bad road, and the fact that the rail is not yet very, very efficient in being able to move a number of these goods to the port. And secondly is financing. I mean, with the MPR and the rate we are seeing in MPR and the increase in the cost of production is making, and I was talking to a banker last week, and he said a lot of their exporters are slowing down now in being getting funding, because the cost of borrowing has gone up, and that is affecting seriously the profitability of the business, and that is making them to slow down. So we need to, there's need for improvement there. I think Nexim Bank can help in this regard. Nexim is able to give a cheaper source of funding. The only challenge with Nexim is that Nexim request or requirement is as good as the private sector. So it's not helping a lot of businesses that could have been able to do shipment very well if they're able to get loan from Nexim. So I think Nexim can step in here, maybe supported by CBN, to be able to ensure that even though they can't get a lot from the private sector, they are able to get a lot from the developmental institution and export credit agency like Nexim Bank.
Right, and definitely we've seen, devaluation of the naira, and definitely devaluation of any currency makes imports more expensive. So should we call this a bright spot for naira devaluation? Is this sustainable?
No, I mean, the devaluation is as a result of the fact that we're not generating enough forex. If government, that's why I'm concerned about government effort. Even developed countries support exporter by giving them incentive. I mean, incentive they get on time, not like the annual grant that you wait for 3-4 years, like the type that the last administration of CBN was doing, in which if you export this quarter, by next quarter you get some support from government to encourage export. Those are the things we are not seeing. So if we don't see that happening, we might not be able to sustain this growth, because when there is a growth and you can't tie that growth to a particular effort being made by the government or policy direction of government, it's like it's a fluke. If this is going to be sustained, then we must be able to trace it to effort being made by the government to encourage a lot of investment in this sector.
All right, let's look at the top countries we traded with in the first quarter. We see for exports, we see France taking the lead there, has about 11% more than other countries on that list. We also see Spain coming in second for exports, then the Netherlands 8.85% third. And for imports, since we're getting most of our imports from China, that was for the first quarter, then India.
Always been like that.
It's always been China, right? So
yes, every time more than 20-25%, sometimes up to 30% from China.
Right, and so looking at this, and we're trying to, kind of reduce demand, for US dollar at this time. We're trying to get our inflows, getting more inflows of dollars. But looking at China as our top trade partner, what do you think we should be doing with this data, in a way to solve our currency issues? I know we had some kind of direct swap with the yuan at some point, but since they are a major import partner, what do you think we should be doing to, put less pressure on the naira at this time?
We need to be doing two things: reduce demand, increase supply. Reduce demand, increase supply. Now, if you look at the different ways that many countries receive generate forex coming into the economy. You have free foreign direct investment, you have foreign portfolio investment, you have trade in goods, you have trade in services and remittances. We don't have control over remittances, we don't have control over foreign direct investment, we don't have control over foreign portfolio investment. Individuals outside are going to deem us worthy of their investment, but we have control over trade in goods and trade in services. So we need to drive up trade in goods in particular. Now, with the policy being made by the government, which is necessary because of the inflation, to drive down inflation, I have not seen a lot being done on the fiscal side to support manufacturer in such a, particularly exporter, who will be able to increase their productive capacity and increase how much their production in order to be able to generate more effects. So I'm expecting the government to look at, okay, what are the major items of export, manufactured goods that are Nigeria export, and be able to support individuals, companies producing those products, to be able to support the export of those products to grow. And I'm looking at products that can drive the volume, that can move the needle, and in favor of naira, strengthening naira. Those are the efforts we are not seeing on the part of the government, and I think the president really needs to do something about this. There is this thing about body language. The body language of the president right now is not showing that there's a serious interest to grow non-oil export.
All right, so with inflation food inflation at over 40% at this time, we've seen the federal government thinking of removing, import duties on some items like food and other, pharmaceuticals. How do you see this move?
Oh, yes. I was expecting this to have come on a lot earlier. At some point, importers were complaining that every time the rate goes up, the customs will adjust their rate, and that is increasing. And so on one hand, we are talking about inflation and the fact that food inflation is a major contributor to the inflation or to the basket, but not much effort is being made in this regard. So for me, this is a very important policy, commendable that the government is looking in this direction, that drugs, food, not, and I think it should go beyond this. I think it should include raw materials that is used by the manufacturers to produce food, like wheat or any major raw material that is being imported that is being used by manufacturers to be able to produce food that we're buying and consuming locally should also be included beyond the food and drug and all other things that have been added to it. But I think it's a good decision, right in the right direction, which I think should contribute to some extent reducing the food inflation contribution to the general inflation in the country.
All right, definitely. The battle against inflation here continues. We'll see how far the government goes with this move. I think it's for about 6 months as a proposal. We'll see if they can do it longer and also analyze the risks of that. Thank you so much for coming on, Dr. Bamidele Yemibo, the MD, 3T Impex Consulting Limited. It was great having your perspective today.
Thank you for having me. Bye-bye.
Thank you. All right, we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, let's head straight to the markets now. We have Anita Edit with the details right here. Great to have you, Anita. So it's a brand new trading week, and I'm sure investors are looking to a lot to make that investment decision for this week.
Yeah, happy new week, Ladi. Well, surprisingly, it's the second week of June. And of course, 6 months.
I thought June just started.
Exactly. I can't. It's not too long we said Happy New Year.
Yeah,
and of course, we're now heading to the first half of the year, almost gone. So halfway empty, halfway full. That's where we are.
Really moving fast.
Right. So now let's talk about the markets. The market for last week first, we're starting off from last week to what we are. Last week, the market lost about 0.08% week to date, which translates to about 44 billion taken up by profit takers on the shares of Unity Bank, Seplat, GT Code, Transcorp, FBN Holdings, as well as some others. So they printed that negative close for the market, and then 32.7% year-to-date positive in positive territory. But at intraday, the NGX Nigeria stock market was a lone gainer at intraday, up by 0.15%, and still oscillating within the 99,000 points, 99,372.13 points for the all-share index. And for the South Africa here, obviously a 0.82% pullback at intraday, still not too comfortable at 76,221.81 points for the JSE market. Now, on the other side of the market is still the red color, still making the imprints there, 0.55%. That's more than a quarter, more than half of a percent decline for the Egyptian stock exchange, EGX30. And then the Kenyan stock exchange, as at Friday, was a tad down 0.01% in negative territory, still very much within the 114.6 point index. And now still with Nigeria's financial markets, we'll talk about the fixed income, where we saw Treasury bills performance last week. First, we're reviewing the fixed income market, where we saw bearish sentiment, bearish close. The average yield there, it rose by 35 basis points to 22%. And for this week, there's going to be a public holiday on Wednesday, so the primary market auction, which is supposed to be holding on Wednesday, will be shifted to Thursday. And there we'll see that the central bank is expected to roll over about 44.23 billion worth of treasuries maturities that will be maturing this week. Last week, we saw the first NTB auction being carried out by the central bank and the debt management office. And then for the bonds market, we also saw bearish sentiment prevailing in the treasury bond secondary market last week. Average yield there, it expanded by 4 basis points to 18.7%. Now, for a closer perspective for last week trading, intraday, and what to look out for the rest of the week, let's join Tobe Ikpe, fixed income dealer with Access Bank. Thank you for joining us, Tobe.
Thank you for having me.
Okay, now, Tobe, first, let's get on with the fixed income market. At intraday, how is the market moving? And also taking into cognizance the Naira, which as at last week made some appreciation. So tell us more about this.
Well, last week, we saw a little bit of appreciation in the Naira due to not much demand for FX last week. And we witnessed the same trend opening today. The market is currently trading between 1490 to 15 levels. Those are where the offers are out for the greenback, but we've not seen much of takers to hit those, to put their bidding for Naira, for USD at those levels. So the market is a bit quiet, and we've seen the rate remaining stable around that level.
Okay, first, we've done that, but at the same time, we heard that the central bank or the Nigerian government will be getting a loan from the World Bank sometime later this month. So how is this expected to play into the Forex market? You're an FX trader, so tell us more about this expectation from the World Bank, a loan from the World Bank.
When the news of the loan from the World Bank was welcome news for the country, it will help build the FX reserves and provide buffers against any volatility in the FX market. So that loan that coming in, what it does is just build confidence for the country. The reserves have been declining for the past few months, but this loan would top it up, and that gives foreign investors, anyone that's looking at the country, a bit of confidence that the central bank has the ability and resources to provide support for the Naira when needed.
Okay, Tobe, I think we'll leave it there, and of course allow you to get back to your job as a fixed income trader. So thank you so much for your analysis on our show.
Thank you.
That was Tobe Ikwe, fixed income dealer with Access Bank. And now, from there, we move over to the Middle Eastern markets, where we see the GCC stocks there. They're at intraday, they were mostly in the positive territory. For the markets on the United Arab Emirates, we see a 0.46% increase there. At the same time, we got the news there that one of the country's satellite communications company, which is Al Ya Satellite, has signed a contract with Airbus Defense for its new space, new geostationary telecom satellite, which will be built by Airbus. So that's one of the factors that's revving up this market. But for the Dubai, we see a 0.3% pullback at intraday at 39,000, almost at the 4,000 level where the market left some time ago. Now, on the other side of the market, for the Saudi Stock Exchange, we see the Tadawul up 0.12% at 11,869.88, while the Qatar Stock Exchange at intraday 0.35%, very much in the green. So that's it for the Middle Eastern market. And for the US market, we see first the stock futures, they're slipping. For this week, we'll be expecting that the Fed, that's the US Central Bank, will be meeting on Wednesday over the interest rates decision. And of course, we also, the markets, investors will be bracing up for the US May inflation data, which is also all expected to have some impact on the market. Now, investors will pass through the Fed's updated projections on the timing and frequency of rate cuts, which are now pricing in just one rate cut this year, and that is expected to come sometime in November. Now, Wall Street is coming off a positive week for the major averages. First of all, we saw the S&P 500 touching a record intraday high on Friday, while the broad market index 1.32%. So, meanwhile, the 30 stock Dow Jones Industrial Average registered a 0.29% gain on Friday, while Nasdaq was up by 2.38%. And lastly, for the markets that we track, we see Asia markets closing mixed. But mind you, for today, most of the Asian markets are closed for holiday. So it's just the Nikkei, which is Japan's stock market, and South Korea's stock market. That's a Kospi, which you see very much in the green, 0.92%, and still oscillating in between 39,000, 40,000, and 38,000. 40,000 was the highest level it had gotten to, but still rotating around that 39,000. While for the South Korea's Kospi was up by 0.79%. For the close of Monday, but for the other time, for the other days, which was on Friday, we see Shanghai very much in the green, 0.08%, while Australia's ASX 200 very much in the green, 0.49%, as at Friday at 7,860 points. So, Ladi, that's all the markets that we have, both at intraday and for the close of today for the rest of the world.
Right, and I'm sure investors racing for that US Fed meeting. That's for Wednesday. And I keep imagining, what if we get that cut? What if the US Fed cuts interest rates at the next meeting? I can't imagine what will happen.
Well, I think I wouldn't be surprised, because you call them the big three, as Bank of England, the European Central Bank, as well as the US Federal Reserve. So whatever move one of them makes, the rest are likely to follow suit. So, but of course, one thing to consider will be that stronger than expected U.S. jobs data, which came out sometime on Friday. So, very much,
still a lot of strength in the U.S. Job market at this time. But thank you so much, Nathan, for the details right there for most of the markets that we track. All right, let's get a check on the UK now. It's all about the elections. Simon Pusey joins us from our London studio. Great to have you, Simon. So we see JP Morgan says Labour winning the UK election would be positive for the markets. What are you hearing about this?
Yeah, afternoon, Laddie. Well, the Wall Street giant, obviously, JP Morgan, as you say, they're forecasting a net positive impact on markets if the Labour Party wins the next general election. Analysts there believe it will be particularly positive for the banking, home building and food retail sectors. They say the current Labour Party is occupying a centrist platform. It's obviously gone from the far left under Jeremy Corbyn, now under Sir Keir Starmer, to more of the centre and modestly pro-growth, but crucially with a likely cautious fiscal approach. Sir Keir Starmer saying earlier today, Labour will pull the lever called growth, and insisting he will not have to raise taxes on working people if his party wins the election. So markets view a Labour majority as perhaps the most market-friendly outcome of the elections. People won't forget, of course, the damage done by Liz Truss's budget just a couple of months ago. There won't be any of that this time around. And let's just generally reflect on Labour. Their reputation has always been for borrowing and spending on public services like the NHS, and general public institutions. It's not really that of private business. But this Labour Party looks a little bit more like that of Tony Blair's 15 or so years ago, in terms of it seems to be a little bit more business, a little bit more small c conservative, a little bit more centrist. And so I think that's why the markets are reacting in the way they are, and why JP Morgan have come out and said that markets will react strongly, is that it's probably the most steady, fiscally responsible outcome that can happen at this general election.
Right, and we see most of the contenders there giving big promises about the NHS. We'll definitely see if they actually make that effort. But let's look at the currency market now. We see the pound has hit the highest since the summer of 2022 against the euro. What's driving sentiment there?
Yeah, well, as you say, the pound has hit its highest in nearly 2 years against the euro, though it did drop against the dollar. We'll talk about that later. The euro dropping to as low as 84.53 pence, its lowest since August 2022. And that's, of course, after the French President Emmanuel Macron called that snap election, which I know you've been covering, after being trounced in an EU vote by the far right. More about the snap elections in France and uncertainty in Europe than I think any major confidence in sterling. I think it's much more what's happening over in Europe. How often have we seen British instability recently, for example? Well, now compared to countries in the euro, the pound does look fairly steady, with most people expecting a centrist Labour government, as we were just talking about, compared to some pretty uncertain elections in France in just a few weeks' time, with everyone in Europe seemingly shifting over to the right. So I think it's more about what's happening at the moment in the Eurozone than what's happening here, is why the pound is slightly stronger than the euro for the first time in a while.
All right, we'll keep tracking those movements. But how are the markets looking at intraday in the UK?
Yeah, well, let's start with the markets and the FTSE All-Share, which is down 0.3%. The FTSE 100 down a tiny bit more at 0.31%, and the FTSE 250 down around the same, valued at 20,484. Turning to sterling, that's down on the dollar by 0.25%, up on the euro, which, as we said before, is struggling today because of that news about the snap French election. That's by 0.13%, and the pound is down too on the Japanese yen by 0.26%. The main thing to watch for both the markets and the pound this week in the UK and in London will be UK wage data, which is out on Tuesday tomorrow. We'll keep you updated on that and how it affects both the FTSE and the sterling.
All right, Simon, thank you so much for the update. Thank you.
Thanks, Laddie.
All right, let's take it on to Europe now. See, most of Europe went to the polls yesterday. People across the 27 member states of the European Union were tasked to elect the new EU Parliament. Lars Holters with DW and joins me from Berlin. Great to have you, Lars. So what was the outcome of the election and what are your first thoughts?
Thanks for having me, Ladi. Well, it was as bad for the governing parties as many had feared. Germany is currently ruled by a three-party coalition, and since there are a number of problems plaguing the country these days, including, of course, a very weak economy, all three parties in that coalition lost loads of votes. Now, of course, this election yesterday wasn't about Germany at all. It was about who we're sending to Brussels. But still, on the EU level, many have punished the parties that they aren't happy with on a national level. This has now led to a situation where the long governing but now opposition CDU has won, and the right-wing AfD came in second. Now, that last part, of course, is not pretty, especially since it mirrors the results from many other countries, including France, where the right wing also performed strong, as they did in the Netherlands and in Austria. All in all, the extreme right has been strengthened, but it's unlikely that we'll be able to change course on much the EU is trying to accomplish, and that is mostly due to the fact that no one wants to collaborate with them.
All right, what's top on the economic agenda now for the EU?
I guess there's one economic question absolutely dominating the next 5 years, and that is what role will the EU be playing in an escalating trade war between the US and China, the world's two biggest economic superpowers? While the EU is obviously allied with the US, the question, of course, is mostly about what position the bloc will take in dealing with China. And conflicts between China and the EU itself have been escalating too, of course, over the past couple of years. So we don't even need to look at the US to see some real rivalry with the East. As a matter of fact, we'll be getting a first glimpse at how EU leadership will be approaching China in future in just a few days when Brussels will make its final decision on Chinese auto exports. Brussels has been threatening to put import tariffs on Chinese cars, but those, of course, are heavily subsidized, and that's what the EU doesn't want to deal with any longer. However, member states aren't all on the same page here. France, for example, has been strongly advocating for tariffs, while Germany, backed by their automakers, have been cautioning Brussels to act out of fear, of course, of countermeasures that Beijing might enact. So, elections or not, within the next couple of days, we'll be seeing some major decision making.
All right, we're waiting for that. Thank you so much, Lars Holter, right there in Berlin. Thank you. Let's take conversation forward now. It's all about the commodities market. Let's get a sense of what's going to happen with the US dollar this week and how that's going to impact the oil and the gold market. Joining me now is Wachira Kiriki, is a financial consultant, joining me from Nairobi. Great to have you on the show.
Thank you, Ladi. It's been a pleasure. I've not been on the Channels TV in a while. It's a pleasure to be here today.
Yeah, great to have you. We missed you there. But oil posted a third straight weekly loss last week. What do you think drove sentiment, in your opinion?
Yeah, so my sentiment is that the gold really dropped on Friday in light of the non-farm information that came out. But it has rebounded quite well. Today we are currently at $2,303 per ounce, which is up almost 80, 100 points from the low. So we are seeing a strong recovery. Of course, this is a very fundamental week. We're having three major news coming out on Wednesday and Thursday. We're having the unemployment claims come out on Thursday. We're also having the Fed statement coming out on Wednesday. And also we're having a CPI month-on-month and year-on-year coming out on Tuesday, tomorrow and Wednesday. So we suspect this is just anticipation and just a normal market bounce from a very strong support. And the trend will either continue from Wednesday on Thursday, or there's going to be a significant continuation of the process. Gold has been on a significant downfall ever since China stopped buying gold. The Fed of China stopped buying gold, the government. So we think now it's just more anticipation in light of the fundamentals that are going to be announced this particular week, Ladi.
Still looking at Brent and WTI, do you think WTI will hold that $72 level, for this month?
Yeah, as of now, actually, as of today alone, Monday, we are it's trading at 76.3 US crude, 76.3 per barrel. So it's a new high. It has rebounded quite a bit. We think it's driven by speculation, not fundamentals. There's major news coming out on Thursday regarding the crude inventories on Thursday. So we think, because remember, June is a very unusual month. It's simultaneously the end of a quarter and it's also simultaneously the end of a half year. So there's a bit more speculation going forward, and we think there's a bit more demand for oil companies and especially aeronautical companies, aviation companies that are trying to bulk up in preparation for the next year. So that bounced up to $76.3 per barrel. I don't think it's supported mainly by fundamentals. It's just purely hedging and companies just taking positions to protect their half year, and a lot of speculation going on, not really fundamentals. So we expect once those announcements are made, the market will probably drop back down as it should. This is just a small breather upwards and a small tick upwards, as we call it, before the market goes to drop. There's been a very clear resistance, and we don't think the market is going to significantly go have an upside. We think the downtrend is more significant, and most of the traders I know, institutional and retail, are holding sell positions on oil as of now.
Right, so I guess it's all about shorts right now. But let's go back to the metals market. Definitely, we did see a big drop, 3.5% on Friday. That's the biggest drop we've seen for gold. So I'm wondering, is the peak in for gold? Has gold peaked?
We think it might have peaked. It has been oscillating at that particular level for the past 2 weeks. That drop was very massive and it was fundamental driven. And so we think that the market is probably going to keep dropping. It has struggled to do not more than 50, 100 points between today morning and now, which is almost a three-quarter of a day. So we think the bear trend has officially begun. We are holding strong sell positions of gold. It has not had a very strong climb, and it has not recovered more than even 10% of what it dropped on Friday. So we can, it's an intelligent decision to say that the market is still a very strong trend on a bear trend. Monday is going to go slightly up. Then from tomorrow and Wednesday, Thursday, the bear trend kicks in. Gold is for sure is a very strong sell. And anybody holding a sell by Friday will be very happy. And we think it hit a very major resistance. It has officially broken all supports and it's now dropping down on free fall.
Right.
Structurally, yeah.
You did mention, China accumulating gold and maybe having some kind of pause there. Is the trend going to change now? Are they going to stop accumulating gold, at this time? And have we noticed if Africa is trying to follow that trend and also accumulating gold for their reserves?
Yes, Ladi, I think most African traders are holding positions. I'm in touch with a few institutional traders. We are officially of the opinion that it's a sell market. Africans don't trade gold primarily on fundamentals, much as we produce a huge chunk of it in South Africa. We are basically, we generally are more speculators than we are owners or holders of the metal. So we think gold is going to be a very strong sell. The index, maybe that's something I can touch on as well, is at 104.81. The index is always a very strong metric of where the dollar is going because it's an average of the dollar, it's US index. It's a weight of the dollar measured against all other currencies, especially the majors. And so it has started having a bit of a sell trend. So we think that maybe we are waiting to see what the news is going to be on Tuesday or Wednesday. Monday is always not the best day to find a trend for the week, by the way. It's a day to assess because the remnants of what happened on Friday are always there. So much as I'm sure that gold is a sell, today is a buy. Much as I'm sure that crude is also a sell, today is still upwards. Index also dropped slightly, but I think it's going to be a buy. So the correlation between what is happening now and what's going to happen in the next 2-3 days is slightly different because markets just don't drop vertically or just they tend to oscillate, consolidate for a while, then they keep dropping. So my opinion is that crude oil is still probably a sell, in my opinion. Gold is still a sell, in my opinion. Index is a very strong buy. But the ridiculous news that is going to come out between today and Thursday are going to be the biggest determinants of how these commodities and currencies oscillate and go about in the next 2 to 3 weeks as we start to end the half year, which is ending in 3 weeks. So there's a lot of news coming out in the 2 to 3 days, and I'm keen and careful to observe that. But most institutional and retail traders are very strong bear holders and expecting a significant drop in the market, Vladi.
All right, so looking at the prices earlier, I see, gold was down, but silver was shining by 1.44% at $29.86 per ounce. Yeah. So why are we seeing more demand for silver at this time? Is silver about to rally?
I think it's pure speculation. There's absolutely no reason why silver should be up. But like I said, it's just a slight uptick after the major drop. So we are hoping that's going to consolidate, then start dropping again. Technically speaking, since I'm a technical trader, not even a fundamental trader, there's a very strong support and the trend lines have been holding quite a bit. But we think that the upside is done, and the market is just consolidating. It is going through a session called a breather. Otherwise, fundamentally, there's absolutely nothing holding the price of silver up. And it's just a case of speculation. And when profit taking happens, when people who are holding sales exit, it suddenly looks like it's a buy market, but it's not really a buy market. It's just a reduction in the number of buyers and the number of sellers being held constant. All right. So we think it's going to start coming down. Monday is probably not the best day to see an uptick. It's not a very strong buy trend. But technically, we think it's still a sell. And so any wise trader should wait out. Then the sell trend kicks once again, and then we start taking those positions. Silver, gold, those metals are always very, very fundamental driven. Now, as you know, we've been going through a 2 to 3 month, something called the dragon in the room situation, as opposed to the elephant in the room situation. So China has stopped officially buying gold, and that's why maybe there's a bit of a drop, so to speak. And I think it's going to attain its real level as the market continues to drop. This cannot be the real price of gold. It has to drop fundamentally, especially as we start seeing Q2 coming to an end. There's absolutely no reason why gold should be an uptrend. So we're thinking and hoping that's going to be a sell. We are holding positions on a sell, and let's wait and see how it goes.
Yeah, quite interesting, the dragon, in the room at this time. But what are you seeing for the U.S. dollar index? We did see some strengthening last week. What are you expecting for the U.S. dollar this week?
The dollar, yeah, fantastic, good question. So like I mentioned earlier, the index is at 104.81. It has seen a slight change, so to speak. But it's going to be, like I said, I think it's going to start trending horizontally. Because now that non-farm happened last week and it did what it did, I expect it had a very strong surge upwards. So I strongly suspect this week is going to try consolidate as it waits for the announcements, especially on the unemployment claims, which is going to be coming out on Wednesday. All right. So dollar has been gaining significantly last week against most of these currencies. I don't think that strength is going to hold. Not just because of the news, but because technically, in my opinion, it has hit a very strong resistance, and index should be able to start dropping, in my opinion, in the next 1 to 2 days. But like I said, I'm cautious on index because it's half year. There's a lot of data coming out on employment claims, so I want to see how it's going to. It's hit a very, very strong resistance. So let's see if it's going to keep holding or break that resistance. And I'm not sure what could drive it to break that unless now we get very unusual economic data this particular week. All things held, I think it's still going to drop after some point. I think it's done its bull run, and there's nothing holding it.
Right. I guess it's time for the shorts to come in at this time. All right. Thank you so much, Wachira Kiruki, finance consultant, joining me from Nairobi. Thank you so much.
Fantastic. Thank you, Ladi. It's always been a pleasure for Channels TV.
All right, let's take it on to North Africa now. See Egypt's inflation decelerated to the slowest pace in a year and a half, even after steep currency devaluation and historic move to raise the cost of subsidized bread. Consumer prices in the urban parts of the North African country grew at an annual 28.1% compared with 32.5% in April. According to the state statistics agency, that's CAPMAS. The slowdown was driven by a 3% monthly decline in food and beverage prices. Was the largest single component of the inflation basket on an annual basis. That increased by 31% in May versus 40.5% a month before. All right, let's get a check on the crypto market now. If we look at the screen, we see it's red on the screen today. See, just a few pockets of green right now, showing that the sell-offs continue, even though we saw that big move up for Bitcoin. But we see the likes of XRP, ADA, AVAX, those in the green this afternoon. Let's look at the sentiment in the market. We know it's still a greedy market right now. Greed, 61 points. That's checking with the fear greed index for the market. Let's look at some top stories now. We see 100,000 Bitcoin that's been pulled out from exchanges so far. This record-breaking amount, definitely, we saw that move happen. The post-halving. So these are most of the post-halving moves we've seen at this time. And when investors start to pull out most of their coins from the exchanges, then you know that they're expecting something, definitely in this market. Now we also see Cardano, they're expected to have a hard fork that's coming soon. The blockchain network championed by Charles Hoskinson is on the cusp of a major upgrade. The upcoming Chang hard fork that's targeted for June, promises to usher in a new era dubbed the Age of Voltaire. That's according. So we'll see how that impacts Cardano price. Then Chili's set a date for the Dragon 8 hard fork. That's an important development today. According to an announcement, a new date has been set for the previously postponed hard fork. The Dragon 8 hard fork planned for Monday, that was June 17th, according to Turkish time on the Chili's network. So definitely we'll see how that also impacts traders, how traders interact with that market. All right, let's get a check on most of the major issues right now in the market. We have joining us now is Oladotunn Akongbe, is the CMO at FlynnCap, joining me via Zoom. Great to have you on the show.
Hello.
Hello, you might have to unmute.
Sorry, I didn't get that.
All right, so welcome. It's great to have you, Oladotunn. So talk to me now. We've all been talking about crypto adoption, but the stance we have in Nigeria, there's still no clarity right now, about cryptocurrency. So I want you to talk to me about the kind of conversations that are being had these days about getting the right regulation for crypto, seeing that we have a new Director General of the Securities and Exchange Commission.
Okay. Thank you, Mr. Ladi Williams. It's a pleasure to be here, and I'm excited to share my insights and my findings on the current regulatory framework as regards crypto adoption in Nigeria. So we've had a lot of back and forth from the Nigerian government and the CBN in general as regards crypto adoption, in particular the peer-to-peer trading, which was like some kind of drama a few weeks ago between Binance and the CBN. So it's a great thing to seek for regulation. Crypto trading, all new, relatively new financial instruments, and they need to be regulated. There is a need for regulation, but we need to do the regulations right. We need to get things right. We just don't throw the baby and the water away, because we can benefit a lot from these services. So there are meetings between stakeholders in the industry already. Earlier this year, there were like some laid-down rules that was rolled out, but they are still not sure. They are still not rigid yet. So as of now, there are meetings between stakeholders in the industry on what regulations to be placed in as regards the KYC, anti-money laundering, and also to show a clear representation of, okay, is there speculative trading? Is there currency manipulation? Which is like the dark horse in this whole adoption of cryptocurrency. So the government and the CBN, they are currently meeting. They are holding meeting to see what is actually happening. Is it true that people are manipulating the currency with peer-to-peer trading? So that is the face of where we are right now. And hopefully we'll come out with something positive, because with nascent technologies, with nascent financial instruments, there are always a lot of back and forth from the government, and stakeholders. And we hope that this will not be an exception to finding like a structure to this, and very soon we hope things would go in the right way.
But from what you've seen so far, we know crypto exchanges and some other crypto players, they've been accused of manipulating, currencies. So talk to me about how, because we know we have a lot of people that trade crypto or are in this business for different reasons. But what portion of that population do you think are involved in currency manipulation?
All right. For all technological innovation or financial innovation, there would always be bad actors, definitely. But I can assure you that the percentage of bad actors in this game is very, very minute as compared to people who actually use the peer-to-peer trading for legit means. People use peer-to-peer trading to send money abroad, to buy goods, to transact and all that. People use it as an alternative means to pay school fees. Because we are short of FX in Nigeria. It's a known problem and it's very, very popular. So this is not like something hidden. So, but I can tell you that the bad actors in this game, they are very, very minute. But we can't allow small percentage of the population to jeopardize what can be a very, very innovative approach by the government or by the stakeholders in general to make life easier, to make transaction better, to make payments also better. So the amount of people, the percentage of bad actors in the game are very, very small. So we could focus on the good parts and also find a very, very structured way to curb these bad actors in the game.
But it seems the bad actors, even though they're small, seems they have a war chest of cash to play with.
That's very, very true to a large extent, because a few bad actors could be backed by some very, very important people and some very, very well invested people. Let me put it that way. So when we have structured rules and regulations for KYC and anti-money laundering, all of this could be easily checkmated. Like we could easily check all of these things. So I think this is what the government should look at working on, how they can implement KYC and anti-money laundering regulations into crypto exchanges that would favor the government and also that would also serve the stakeholders and the users in Nigeria. We could see the instance of Binance US. They could have something like that where the companies are registered in Nigeria and they are domiciled also in Nigeria. They have offices in Nigeria. And there will be a lot more transparency in this game. And with that, anybody that would come into the game to form some kind of bad acting and all that, they would think twice before the leap. Yeah.
Right, so much to unpack there, but definitely be watching how regulation plays out right here in Nigeria for the crypto market. Thank you so much, Olatotunbo Okongbe, CMO, FlinkCap. Thank you.
Sure. It's been a pleasure joining you.
Thank you. So that's the show today. Visit channelstv.com for more updates. I'm Ladi Williams from Media Team right here at Channels HQ. It's bye for now.